Hi folks, welcome back. Hope you are doing well. Today we have a lecture 6 of ICT A to Z beginner series. If you are new to our channel, make sure you watch the previous one. I already make playlist on my YouTube channel. So today video we have ICT basic concept part 4 daily bias example on different markets. Okay, so in the previous video I show you example on a gold, and today I want to show you on different market like NAS 100 and in Euro USD as well on BTC as well. So make sure you watch this video till end. So let's get started. So we are on NAS 100 1 hour time frame. So I apply one indicator, okay, where you see the box of Tokyo is Asian, for below London, a red for New York. The markout should be your chart should always on UTC -5 or -4 New York local time. Okay, I mark out 12 a.m. and 4 p.m. So what we have to do, whatever the candle, it's 1 hour candle or 15-minute candle, we just mark out the opening price of that candle. Okay, so what we anticipating most of the time, what happen, that price will go against your bias and then go to the bullish. Okay, so the basic concept, price will open at 12 a.m. the midnight open accumulation, then if you are bullish you will see a manipulation and then you will see a distribution move. Okay, sometime what happened, price did not come to your midnight open and it's expand to the upside. Okay, or sometime what happened, price open, okay, go upside, come back again, just touch and go to the upside. Okay, so this type of scenario also you will see. The most of time you will see this ICT power of 3. So here what happened, midnight open I mark out, okay, price open, go, you will see 8:30 candle, price come back, where it's come back to this fair value gap, okay, and then give us a reaction to the upside. We are bullish. So sometime it's possible, many of time it's possible that price did not go and create a manipulation phase in the market. Okay, so this type of scenario also happen. So these things happen and you will see most of the time in your market. So you always practice every day. So it's come here, we have a valid reason that we have a fair value gap, okay, and a market structure shift with displacement. Okay, so what is that? No, don't worry, I will teach you later on this series. Okay, so jump onto the next day, market open. Here I mark out, okay, market go to the upside, okay, it's also touch 8:30 low and give you a reaction, and the news driver later on the FOMC meeting, the price go to the downside. So in this scenario you see the price, if you are bullish, price come to downside of your midnight open and give you a reaction. Okay, so basically 3 opening we see. Basically first one, we want to see did the price go downside of the 12 a.m. midnight New York midnight. Okay, second 8:30 opening. The third one is 9:30 for this specific market, because the most of the time you see the volatility in 9:30. Okay, next opening, here we are bearish. Okay, always with multiple confluences. Okay, price go to the upside, your opening, we have here order block. What is order block, mitigation block? Inshallah in the next lecture you will understand. Price tap upside and give you a huge move to the downside. Okay, all day. Next day market open, price come to your fair value gap or sometime area, but in not a kill zone hours. You see that 12 p.m. So what is 12 p.m.? If you know my lecture number 3 where I explain the kill zone hours, okay, that we only focus on our kill zone time, okay. So price come to some type of fair value gap and go to the upside, the opposite side liquidity, but we only focus on our kill zone hours, and that's all. Open, price go to against your midnight open, you are bearish, then price go to the downside and then again upside for the liquidity. Come here for fair value gap repricing, okay, and then go to the upside. Next to Euro USD, you have to practice midnight open, at London price go upside, give your reaction to the downside, opposite side liquidity, order block, okay. Next day price open, it does come downside for the liquidity, go to the upside for the liquidity and the order block, as you seen here, tap to the downside. Open, we are bullish, price go downside on the London, give you some setup here, go to the upside for the fair value gap. Open and did not come here, so what we have to do, we go to the 15-minute and we want to see 8:30 opening. 8:30 opening go upside, but did not come to against our scenario. So did we take the trade? Yeah, we have to take trades in some another cases, that later the fair value gap and price go to the here and go to the upside. So later on you will understand the many concepts that are coming ahead. Okay, let's go to the BTC and want to see does price reaction on Bitcoin, the ICT work on Bitcoin. Basically I am not do trade on Bitcoin, but I want to see 12 a.m. green candle, price come downside, give you some type of setup on kill zone hours, and boom, upside. Next day open, yeah, it's working very good. Open London and to the downside, great. Next day price open but did not come to the downside, even 8:30, even 8:30 price come downside and give us a reaction, but the market is very choppy, might be your stop loss hit or something, but the thing is 8:30 it does come to the downside of 8:30 and go to the upside, but market is choppy. The London is almost run too much. The most of the time you see if the London have too much, if you see this type of scenario, the New York will be silent, will be choppy. But it's Bitcoin, you know. Open, price come to the London, give your reaction, but also go to the same time close. So this type of candle, how it's formed, I will show you how this candle form. Open, low of the day, make on London, then go to the upside, and then make high of the day on New York, and then go to the close. candle look like that. So your homework is you have to apply on your market. Are you working on Forex? Are you working on metal? Are you working on indices? Are you working on Bitcoin? Whatever. Okay. So did you see its work? Somehow the concept is work on all market. So does it mean did you have to take trade every day? No, you don't have to take trade every day. You can take trade in week 1 or 2 times, just enough for you. Because for daily buys, if you are working with daily buys, the weekly candle open, okay, you will see many of the time, most of the time, not always, most of the time, Monday and Tuesday make low or high of the week as per your buys, and then the whole week expansion, and at the end it's close. The price behavior is like that most of the time. You will see. If you go to the daily time frame, most of the time you see same thing. Any candle. If I am going to take example for this, open, okay, down, go high, and then close. Okay, for this candle, what happened? Open, go a little bit downside, a huge expansion, and then close it. Okay, the price behavior, you will always see some type of this Judah swing. Okay, so I hope you learned something from in this video. Make sure you join our Telegram channel. The link will be in the description, and if you're new to our channel, make sure you subscribe. And if you want to join a good broker with zero spread, swap free, and a good leverage, both brokers will be their link will be in the description. Until next time, be safe.